Hello and welcome back to the PACE Global Advantage Market Report. For news and information that can affect you and your portfolio, be sure to check paceglobaladvantage.com. We're joined again today by economy expert Bob Tebbutt from Peregrine Financial Group Canada. Bob, let's take a look at the recently released employment numbers out of the U.S. Unemployment rose to 9.6% from 9.5%, and overall the economy lost 54,000 jobs. What does this mean for the U.S. economy going forward and for the U.S. dollar in particular?
Well, it was a better report. What you've said, Andrea, is that the numbers didn't look that good, but in effect, they were better than expected. They thought that the unemployment level would rise by a point, which it did, but the job reduction was less than expected, and more importantly, in the business side of job, they increased more than expected. As well, previous month's numbers were improved upon and when they readjusted them. So it was a pretty good report and adds to the PMI numbers that came out the previous day. And frankly, it was a better report than the market wants to hear. The market is in a negative mode right now, and they really need to get some spectacular numbers to break their habit of being negative. This report was good. I thought it was good. Market didn't think very much of it.
Statistics out of China, Russia, India, and the U.S. are showing that purchasing managers were positive. What was the reaction by the markets?
Well, purchasing managers are surveyed on a monthly basis, and they say what they are doing. So if they are buying more than they were last month, that's a good sign. And anything basically above 50 is a positive measurement. So they were all up a little bit. They were surprised the market in the U.S. by being up when they thought they'd be neutral or slightly lower. But China, India, Russia, Purchasing Managers Index, which is a PMI, were all very, very strong, indicating that at least those countries and now the U.S. is starting to show some pretty good purchasing managers purchases, and that's good for the world.
Now, last week you thought that gold and silver were a little overpriced, yet this week they were up. Do you still feel that they're going to sell off?
Yeah, I do. I think the market in gold and silver will move because of weakness in the U.S. dollar. They'll go up if the U.S. dollar goes down on occasion. In other times, if the market is nervous, gold, of course, benefits from a nervous attitude. And that's really the way the market has been viewing everything in the world today. They're nervous, so gold rallied a little bit more than I thought it would. I am still short-term bearish, long-term bullish on gold, more so on silver. I think silver's got more upside potential than gold does.
Okay, Bob, let's talk about oil for a minute. Crude oil prices continue to trade in a fairly narrow range. What's going on with crude oil lately?
Well, there's basically too much crude around. There's too much products like heating oil, diesel, gasoline. There's too much of those. The stocks are probably the highest in 10 to 15 years. And that's keeping the market from rallying very strongly. And the economy of the U.S., which is the largest user of crude oil in the world, it really hasn't got going. If we could get the U.S. economy moving a little bit stronger, then we'll see a stronger crude oil price. But for the meantime, there's lots of supplies. So whenever there is increase in demand, there's supply to meet it. The only question, of course, is hurricanes.
Hurricane reports are back in the news this week. How do these storm forecasts affect the oil market?
Well, the hurricanes have a kind of a short-term effect. Katrina, for example, back in 2005 was the most severe hurricane we've seen in a number of years. It affected the market, shot it up very sharply, but on the day that it hit the Louisiana coast, the price of crude oil topped out and came down sharply. So you have to kind of look at the hurricane season as a 1 or 2 day effect, depending on when the hurricane does arrive. There has been no hurricanes into the U.S. Gulf this year. They've all been up the East Coast. Over the weekend, we've seen pretty severe storms running right up into Nova Scotia and Canada. But there is expected to be about 6 more strong hurricanes into this area, and some of them are expected to go into the U.S. Gulf. That will cause the crude oil market and the natural gas market to get quite strong.
All right, Bob, let's wrap things up. What are you looking for next week, and what are you bullish on?
Well, as I said before, I'm bullish on copper, although I think maybe it stretched itself a little bit too much. The elastic band is a little tight, and I think it could set back down again. I see the euro dollar looking stronger. In other words, a weaker U.S., stronger euro dollar. I see gold setting back, as I've said, and silver setting back a little bit. So I'm a little bit short-term, very short-term, negative on the markets, looking for opportunities to buy those commodities.
All right, Bob, we'll see you and everyone else here back again next week. For more information on business news, visit paceglobaladvantage.com. See you then.